In the month of April, I made over $6,000 trading options on an account that started around $13,500 or so, and that's after commissions and fees. You can see my ending account balance just over $20,000 up here. My total gain for the month, almost $6,200, all short-term gain because I'm trading these contracts almost always intraday, and sometimes I swing them overnight into the next day, but never longer than that. Zero long-term gain. The deferred loss here is referring to the wash sales. It's not too important, it's just for tax purposes here. And the total commissions and fees, about $1,150. On E-Trade, each of the contracts that you trade costs 50 cents each way. So if you buy and sell a contract, you pay $1. So in other words, I traded about 1,150 contracts in April. And you can see every single trade that I make with the symbol, the quantity, the cost of the trade, the proceeds, and my gain or loss in this column, as well as the deferred loss, again, just for tax purposes. And you can see they're all short term. And I'm just going to scroll through these just so you can see just how many trades I did end up making. So you can see at the bottom, I traded just over $250,000 in volume, and I netted just over $6,000 in profit. Now, because my account had somewhere in the $13,000 range at the start of the month, this was roughly 50% in profit on my entire account value. Now, as I'm scrolling through this, you can see that most of my trades are about 10% of my portfolio when I'm entering them, somewhere around the $1,000 to $2,000 range. Now, sometimes I'll spike into higher values, and this might be if I'm averaging down a position or super confident in a position and going to get out quick. But for the most part, most of my trades, I target about 10% of my portfolio. So as I was starting the month, the positions were around 1,300 or so, and as I'm nearing the end of the month, I'm trying to target around $2,000 on each position. So in this video, I'm going to tell you about my strategy, including profit targets, stop losses, and what my entry and exit parameters actually are. And I'm also going to show you this with real examples on the chart. I'm going to go through 3 separate trades I took on Tesla, Facebook, and Microsoft, show you exactly why I entered and why I exited. So let's dive into the strategy first. I personally trade almost entirely on the 1 and 13-minute charts. And after hours, I'm actually doing my charting on the 17-minute chart just so that I can better prepare and see the overall trend. But when I'm actually diving in and making these trades, both the entries and the exits, they're typically either on the 3-minute or the 1-minute chart. And that's because I want my exits to be within a few hours at most after my entry. I like to get in and out of trades extremely quick and just take that quick profit over and over and over and let it build onto itself. Now, my trading and analysis for options is actually quite simple. If you've seen some of my other videos, you know that for long-term analysis, I love to use things such as Elliot wave theory, Fibonacci retracements, parallel channels, trend lines, Fibonacci extensions, pitchforks, and many other different tools, as I believe that predicting long-term movement in the market is best done with each of these tools that I've named. However, when I'm just scalping options intraday, I use almost none of that, and I try to keep my trading extremely simple. So if I just zoom out to a 17-minute chart here on Microsoft, you can see that the only thing on my chart for the most part are these pink lines. And these lines are just support and resistance lines in the market. Now, if you don't know how to find these, I do have videos going over all of this. Check out my Technical Analysis 101 playlist or any of the other videos before this, because I'm constantly reinforcing and teaching how to find these support and resistance lines on the chart. It's actually quite straightforward, and with a little bit of practice, you could have the exact same chart that I have right here. The only other few things I have on my chart are sometimes these blue trend lines right here, if I see certain patterns being formed in the chart. And then I also have volume on the bottom down here, and I have VPVR, which stands for Volume Profile Visible Range. So with the volume on the bottom of my chart here, this volume is time-based. It'll tell you how much volume occurs at a specific time. The volume I have on the left-hand side here is price-based, so it'll tell you how much volume occurs at a specific price. More often than not, when there's a high cluster of these VPVR bars on the left-hand side here, so you can see these 4 right through here are much higher than all the ones before it, price likes to fall to these areas because that's where a bunch of buyers and sellers actually are. So if we were to fall from this cluster up here, you could expect to fall through these low volume spots right here and catch support at these other ones down here. Now, if you don't want to use this indicator on your chart, that's totally fine. I honestly look at it very little, and instead, I'm almost entirely, I'd say about 90%, focusing on just these simple pink support and resistance lines. And that's seriously all that my trading focuses on for options. I'll also zoom into one of these patterns that I had drawn, and you can see that this right here, I have blue trend lines right here, and I'll often draw these intraday as price action is actually happening. And I personally like to use patterns such as flags, wedges, and triangles for the most part. Those are the three patterns that I actually will draw intraday and actually use to help me trade. Now again, if you don't know anything about these patterns, I don't have time to go over them in this video, but I have released a video going over these exact patterns. I'll link that in the corner right now. Feel free to watch that now or after this video so that you can familiarize yourself with some of these great patterns. So now, how do I actually enter with these support and resistance lines? I'll give you an example as if we're headed to the upside and I'm looking for calls. The main thing I'm looking for is to have one of these support and resistance lines tested multiple times and fail, and then when we get back to it again, we get a strong volume break above that support or resistance line, and that's the spot I would enter. So let me show you this in an example with Microsoft. I have Microsoft here on a 3-minute chart, and this is near the beginning of April. It's one of the very first trades I took in April. On April 5th, Microsoft had this huge push upwards from about 242 up to this 249.5-ish level. It did peak a little bit above it, but for the most part, we'll call this 249.5. And you can see that over the course of that day and the next day, Microsoft struggled inside of this price area right here. Not exactly at 249.5 every time, but roughly between 249 and 249.5. We peaked once, twice, 3 times, 4 times, 5 times, big pullback, 6 times, another big pullback, 7, 8, you could even call this 9, and even maybe 10 times in here. So very clearly, this price range inside of here, this box that I've drawn, has a ton of resistance through here. After 2 straight days, we can't seem to break through this price action, and every time we come into it, we get a pullback all the way down, back down to this other pink support line that I have drawn here at about 247.6 or so. You can also validate this support range right through here with the VPVR on the left-hand side. You can see that the 2 highest points in volume are these 2 candles right through here, and they fall right at the bottom of this box right here. So they're this price range right inside of here somewhere. So once this happens on April 5th and April 6th, this is when I know that I'm going to be watching this and setting an alarm above this box for a trade. Because I know that when we do finally break out of this, we're probably going to break out of it strong. And that's exactly what I did here. I took a trade somewhere in one of these candles right when we broke above this box that I had drawn, or you could even use that pink line that I have drawn here. It's going to be slightly off, but for the most part, the concept is there. And you'll want to use volume as your verification as well. So if we just take a look at volume, you can see that, of course, the opening of the day has a huge volume candle, and then we kind of get this big red candle of volume that's the highest volume candle besides maybe this peak in here, all throughout the entire morning until this 10:45 candle comes in right through here. This candle has about 200,000 in volume, which is slightly more than the second candle of the day on the 3-minute chart here. So this is my first sign that volume is actually increasing and we might be getting a breakout. All 4 of these candles right here, and you can see the volume in the top left corner, are around 90,000, 110,000 in volume for 4 straight candles. And then this one is about double the volume of the other 4 candles right through here. So this is our first hint just by looking at volume. And now if we zoom back out, you can see that now I'm hovering that same candle right here at 10:42 start. It's actually this green candle right in here. So if I zoom into this area, it is this candle right here. So it's a strong green candle with high volume that's now above that box that we had drawn and right at that $250 psychological resistance as well. So this was my sign to enter, this green candle right here, and we did get a little bit of a pop up afterwards. So we pushed almost $1 up on Microsoft. Now, oftentimes, one of the things you'll see is that when we break out of these key support and resistance zones like this, or above these support and resistance lines, we usually come back and retest these zones before pushing further upwards. And oftentimes this is actually when we can form that bull flag pattern as well. So from the top here, if we just connect the two peaks that we had formed here and then up through here and all the lows through this bottom right here, if you're familiar with bull flags, you can see that that's roughly what this pattern is. It's not the best looking flag in the world here, but it does form this low, lower high, lower low pattern into here, and the price comes perfectly back down to that pink resistance line that we had drawn here. So let's talk about profit targets now that I've told you where my entry was on this. My profit targets when I enter these options trades are always the same, and I think this is super important to be systematic with your profit levels. I like to enter contracts in multiples of 4. So I told you that I like to target about 10% of my portfolio, so if I was trying to enter roughly a $2,000 position and the contracts were $100 each, I would enter into 20 of these contracts. Now, I like to enter them in multiples of 4 because I have 4 profit targets that I like to set on my trades. The first profit target on my options contracts is at 30%. So when the options contract is 30% in profit, that's when I sell 1/4 of my contracts no matter what. It doesn't matter how bullish the chart looks to me, I always take profit at 30%. This helps ease my mind, it gets me a little bit of profit off of the trade, and it lets me use the rest to continue to run if the market's going to let it. Now on this Microsoft trade right here, I was able to get out somewhere near the peak in here for 30% on these contracts. My second profit target is at 50%. So when the options contracts move 50% in profit, I sell another 1/4, and now I have half of a position left. My third target is always at 100%. So when the contracts get to double in their original value, I then sell another 1/4 of my contracts. So now I only have a 1/4 position left. The final 1/4 I actually use and I let it run until I either see weakness in the market or we've hit my next profit target that I've established ahead of time with another support and resistance line. Now typically I don't like to swing my positions overnight because a lot of the time it's a bit of a mystery what's going to happen in after hours. Who knows if some news article is going to change the price or something else is going to dramatically move it one way or the other and make me stop out for way more than I want. However, in this situation with Microsoft, because we had broken strong above this line that we resisted for 2 days straight, and it formed this bull flag pattern right through here, falling right into the support line, and then we bounced off of it end of day, I actually did end up swinging 3/4 of my Microsoft position because I got 1/4 out at 30% here, and we never ended up getting to 50% that same day. Now, of course, this swing ended up working out well for me because I ended up taking most of my profit right at open here because we were already past both my 50% and 100% targets, so I was ready to get out of the trade and lock in my profit. So now you know my entry conditions, you know my profit targets. The last thing to talk about is a stop loss. I base my stop loss on options contracts for when I'm wrong on the trade. That is the main way that I stop out of a trade. Now, I would be wrong on this trade right here if we entered on this green candle that I had established and told you about before, and then right afterwards, we just rejected back downwards. We had no continuation upwards. We just had this one candle that faked us out to the upside, and then we pulled back down and price went down to this support line, and then I'd probably stop out below this support line right here. So if we lost this pink line in here on a fake rejection right here, this is where I would stop out of my trade. Now, typically when I'm entering a trade, I'm looking at the delta and I'm thinking about the contracts, and I almost always try to make sure that my stop loss won't be more than 20 to 30% on the position size. Now, oftentimes I can actually get out at just a couple percent loss, but that 20 to 30% is typically the max I like to shoot for. Of course, if you're trading contracts that expire same day on Fridays or something like that, I like to adjust my position size knowing that I might take a larger loss. So on my standard position size of 10%, I do my very best to make sure that I don't lose more than 30% on that trade, which would be about 3% of my portfolio. That gives me a risk-to-reward ratio as well of about 1-to-1 on my first target, close to 2-to-1 on my second target, more than 3-to-1 on my third target, and my fourth target is, of course, much higher than that, with the runners being able to go multiple 100% if something is trending strongly. The only other minor detail is that if I see weakness in the market, if I see a candlestick pattern that's signaling some sort of reversal, or a reversal triangle breakout with high volume, or a failed bull flag, anything like that with volume confirming it, I might actually get out before my profit targets. So if I were to see an extremely bearish candle and my contracts are sitting around 20 to 25% in profit, I typically would just take off a fourth of my position at that point in time because there's no point in risking that last 5% when I'm seeing bearishness in the market. I'd rather just take off that 1/4 that's just a couple percent away and a couple dollars away and then move forward with there. Typically, if this happens, if I get 1/4 out around 20 to 25%, and then I was right on the bearish movement and we come back downwards, I'll try to stop out of the last 3/4 of my contracts around break even, because there's no point in letting a green trade, a trade that you've won, run negative right after. So let's move on to one more example, and that's of Facebook. Again, I'm at the beginning of April on the right-hand side of my chart here, and here's Facebook on a 3-minute chart. I had support and resistance lines drawn at 297 and 300 on Facebook here, although we just barely missed this 300 peak. We did peak around 299.7. I think it's better to have this right at 300 because 300 is just going to be psychological level. Those round numbers are always going to be key support and resistance lines. So as we were approaching this level, this $300 level, in the beginning of April right in here on April 1st, I was watching for a breakout of this $300 level, and you can see we actually did get it on April 1st. Now this is where actually one of my other rules comes into play, and that's I don't enter a breakout trade of a support and resistance line in the first 30 minutes of the day. I've found that between 9:30 and 10 o'clock, more often than not, when these levels do break, it's actually just going to fake you out and we're going to fall right back down afterwards. And you can see that's exactly what happened. This first candle right here at 9:30 broke strongly above 300, and it looked like we were going to run to my next target or the one after that. But just shortly after, we did fake out and pull much below that $300 level again. So now I'm still watching this $300 level, and for the rest of the day, we can't get back above it, so I don't enter on this day. And in Monday pre-market hours, we had this huge spike up, which rejected around $304, another level that I had drawn inside of here. Now on Monday, we actually had a quick break of this $300 level as well, as we were hovering right around it at the end of pre-market here. And so, of course, according to my rules, I didn't play the breakout of 300, but now I was watching for the break of 304 in here. And one thing that helped confirm that I was going to play this break is that in the second or third candle of the day, we did wick up to 304 here and then fall back down a couple points afterwards. So now after this, I'm definitely looking for that 304 break, and I'm willing to play it whenever it happens. Now this 304 level broke a little bit before the time I like to enter trades. However, volume was increasing here and these candles looked super bullish, so I did enter on one of these two candles right here, likely on the second candle close right here, and my first target was the next pink line up here that I had already drawn. So an entry through here, a target up to there, and you can see we actually come up to that target perfectly, and I took some profits all throughout this area right here as we got a 3.5 point move in Facebook. And then we ended up coming upwards actually to my second target up here at $310, where I took the rest of my profits. So you can see that the entry is pretty straightforward. I'm looking for these key support and resistance lines, as I've told you, and when they break on high volume, that's when I'm entering and targeting the next key support and resistance level. The very final trade I'll show you is Tesla near the end of April here. It's actually one of the very last trades I took in the month, and I had puts on Tesla, and I'll show you why. I have this $698 level and this $692 level drawn on Tesla, and you can see that on April 27th, after hours in pre-market, we came down and tested both of these support and resistance lines. Now when the market opened on April 28th, we bounced upwards, and then we slowly trended downwards for the rest of the day. And once again in after hours, we came down to the $692 level and bounced right off of it afterwards, opening strongly above 700 once again on April 29th. So at this point, I'm watching this $692 level because I know that when we fall below this, we're probably going to fall below it very strongly, and it's definitely a spot I wanted to take puts. You can also look at this as a pattern, and it's a bit of a descending triangle in here, with this top trend line trending just like that, and we have the bottom of our triangle right at $692. Now on April 29th, we actually came down pretty early on to this $692 support level, right around 10 o'clock, which is when I like to look for my entries in the market. And at this point, I'm watching this level very closely, and one of the things I noticed is that we got this bear flag pattern. Now, when this bear flag happens right above a key support or resistance line, this is actually one of my very favorite trades to take, and it's on the break of the bear flag. So the flag would look something like this, where we're downtrending the whole day, and then we get a little bit of an uptrend into here, which might fake out the bulls here. But as I have this drawn on my chart, this is the perfect setup. Right to support, we bear flag, and then I entered right at the beginning of this red candle right here. It had a huge volume spike as we were breaking out of this bear flag right here. And within seconds of this candle open, we were already below this $692 support that I had drawn. So I entered on this red candle right here and I took puts. Now I had this $685 support level. That was my first target on Tesla. And you can see we fell to that actually very quickly. And I ended up taking some profit pretty early on here because 30% of my contracts was hit quick. 50% was hit somewhere around $686 or $87 in here. And the contracts were in 100% somewhere just below the 685 target. And then I sold the final fourth on this bounce upwards right through here. So I had 30%, 50%, 100%, and somewhere around 110 or 120% on the final fourth of my Tesla contracts. But once I exited, I was still watching Tesla because it still looks very bearish. It's falling very strongly, and believe it or not, we're actually getting just a repeat of this bear flag right through here. So through this whole downtrend right here, now we get this slight uptrend right here with higher highs and higher lows. And once again, I had this flag drawn on my chart. The other thing you can see here is that we're flagging right to the $685 level that I had as a key support and resistance line. So we fell through it, and then we had a bear flag upwards, which couldn't break above this pink line right here. And I actually re-entered Tesla further out of the money contracts once again on this red candle right here that broke our bear flag. And once again, of course, you can see that we fell extremely strongly, and I took quick profits somewhere in here for 30%, here for 50%, and down here for 100%. And then for the third time, I noticed we had the same exact pattern. You'll actually see this happen pretty often, so keep your eyes open for it. Another huge fall downwards, followed by another bear flag into here. I held on to the 1/4 position that I had left through here. And once we broke below this bear flag, I knew that we were going to fall further. I targeted the $672 level that I already had on my chart, and I took profit right in here on the last part of my Tesla position. Now, I didn't catch the very bottom. We did end up falling about 4 points further, but I was very happy to take profit from 685 to 672 because I was multiple 100% in profit by then. So that's how I made over $6,000 on a $13,000 options account in April, increasing my portfolio by roughly 50%. I hope this video was helpful for you, and diving deep into the examples helps you see how you can trade options. If you want to learn more about my style, or if you want to trade with me, I do have a Discord where I post all of my entries and exits for the members. I'll put that in the description below. Feel free to come check it out and hang out with us and trade with us every single day. And of course, if you have any questions, definitely leave them in the comments below, and I'll get to as many of them as possible. Now, if you made it this far, thank you so much for watching. If you could do me a huge favor and click that like and subscribe buttons below, that would mean a lot to me for my channel. And with that, as always, good luck trading.